All right, good evening, everyone. Welcome to the Hurley Investments Market View commentary for April 4th, our first one heading into April. Glad that you guys are here. Glad that you can hear me. Just to let you know, Mr. Tony Roten is sitting right behind me tonight in my office. One of my newest clients is now attending live, since he lives just around the corner, our commentary. So those of you that are here, give a warm welcome to Tony. Glad to have him with us here tonight. And hopefully you'll keep attending down the road as you hear this and you enjoy them. All right, a couple things to start off with tonight. Let's go back to ARC Innovations and Kathy Wood. I heard all over the place. Bloomberg, I heard it on Fox News, I heard it on CNBC today. They're now up 30% after being down 70%. So really quickly, net, how much is her fund down on average? On average, the ARC Innovation Fund, how much is it down on average right now? And it's kind of simple math, right? You subtract the big one from the little one. And there you go. Right, 40%, right? The interesting thing, if her average fund, and I heard this on CNBC, so if you want to know if you're being taken or not, right? The average fund, average is, let's just say 40% down. So your thought process is every $100 that you put in there is now worth how much? And this is why I don't go by averages, right? There you go. It's worth 60. Thank you. Jim, let's just say Kohler put the answer in there. Here's the big but, right? I can't put but any bigger than that. But let's do the math. If $100 loses 70%, then it is only worth $30, right? And if the $30 gains 30%, it's only equal to $39. And I actually heard some dummy on CNBC today say, hey, the fund is, the money or the account's only down 40%. And it's not true. It's just not true. In fact, when your fund is down, let's say 70%, right? Does anyone know how much of a return do you have to get on that remaining 30% to get back to break even? How much would you have to get or gain back on that 30% that's left to get back to a break even? And I spoke to a couple people today, so William, you probably can't say anything. And Russ, I don't know if I went over it with you as well, but how much would you have to get back? I got you. That's a stumper, right? There you go, 200 plus. In fact, it'd be a 233% return. Gets you back to break even. And it's a little bit of this understanding that helps out, because someone asked me yesterday, Kevin, what do you mean when you said you are twice as bad as the market right now on the way down, but 3 times as good on the way up? And it's interesting because for the last couple weeks, today the market was up 0.81 was the S&P 500. And for the education group, we were up roughly 447,000, which turned out to be 2.96. So today on the upside, we were basically, to make a long story short, we're up, 3.6 times the S&P 500. But last Thursday, when the S&P was down 0.52 or 56, we were down a full percent. And the reason why for this is right now we are running without protection on some of our core holdings or some of our stocks. Apple, we're just letting run right now. Had a great day, up $3. Boeing, we're just letting run right now. Bank of America, no protection on, we're just letting it run. Baidu was a huge up day for us today. Baidu, we took some protection off this morning. We're just letting Baidu run. In fact, if you go across a lot of our main positions, we had an excellent day in the stock market today. We were able to really do well, which brings me up to reviewing for the quarter. Hey, are our core holdings, are they going to move the way that we wanted them to move? And it's pretty interesting because if you look at Apple, when we started this, first week of January, Apple was sitting right around 172.17. We take a peek at it today, Apple has not quite moved, and Apple is sitting at that, 177, 178 range. But it's bounced above its 50-day and its 200-day. So we're looking to see Apple somewhat take off. It's going to have its earnings coming up. And if you still work your numbers, your target rate on Apple still could be as high as 197.76 to a range of 210.12. Boeing sitting at 215.50 at the beginning of the year. Boy, ugly looking chart on Boeing, right? Take a look on Boeing. It's a pretty flat month, but still not above the 50-day simple moving average, still not above the 200-day. Wish I could have my computer catch up to me. And the key for Boeing to head higher, in fact, right now, it's less. It's only sitting at where'd it close at? 191.18. So Boeing is basically down 10% from the start of our year. Can Boeing still get to where it needs to get to? Well, it can get to that 262, 282 range, all-time high of above 400. It looks like it can get there. Bank of America was trading at $49.18. Guess what? Bank of America is a little bit lower than that right now. Bank of America, through our lovely first quarter, is sitting at $40.83. Basically has lost 20%. As you can see, it's being held on by an S1 support level below its 200-day and its 50-day. It has some pretty significant upside opportunity. And the question was, are these numbers still valid? Can it still get to 57.12 and 69.96? On all of our stocks that we work through, our expected stock price within 1 year, just doing valuation metrics, right? Have any of these changed? And the question really came down to, what about banks, right? What about banks? So here's my question to you guys. Does the war in Russia and Ukraine truly affect the U.S. banks? Could be a trick question, but does it truly affect the U.S. banks? Yeah, way to go, Maud. Maud Mary came in right out of the bat. No, it doesn't. So what does affect our banks right now that they're doing so poorly? Found interesting, someone sent me a little bit of a Barron's article, but our bond market is flashing a recession warning sign because, in all honesty, our 2-year is inverted. Our 2-year bond rates are higher than the 10-year. And we have an inversion, which is typically an indicator of a recession warning. The interesting part is I reworked our numbers. Some of these numbers are now higher. Because of the earnings we had the first quarter, Apple technically is now up in that 205 to, boy, I don't remember. I want to say $205 to $219.50 range. A lot of upside opportunity in Apple. Kevin, you're in Baidu. Why are you in Baidu? Well, because it still has an upside of 304, and which it looks like that they're going to start doing, if they're going to release information for an audit, wow, Baidu can be back up to 300 pretty quickly. If you look at Costco, 558 to 614. Just last week, Costco was trading up at 585. Really excited to see where they can go with their earnings. Little overbought, using a little pullback. It actually was 586.32 last week. And some of you have asked, well, Kevin, how did you come up with these again? I'm going to have the link in there. If you'll click on the link at My Hurley Investment, singular there, myhurleyinvestment.com, you can review what we went over on the 10th of this year as we created these numbers, as we went through valuation numbers. In fact, pretty interesting. Costco is almost there. Apple has higher numbers. What was my other one? Not Visa. Square. Square has higher numbers due to their earnings. I found that pretty interesting, as well as Under Armour. Under Armour has a higher number now. It'll be interesting to see if they can fit and get back up to those yearly highs that we spoke of, or the potential highs that we spoke of on the 10th of June. But the short answer is, and I wrote it down here, the short answer is our earnings that start next week, especially with some of our banks, Wall Street is still 59% bullish, which is a primary indicator for an above average earnings season. Typically, an average season is between 50 and 45% bullish, and if you're below 45% bullish, you usually expect a poor earnings season. But right now, Wall Street, 57% of analysts are expecting companies to beat, which is an extremely bullish signal for our recessionary challenged market. If you heard me last week, we talked about a recession. Do I think we're going into a recession? I do not. The numbers don't warrant it. We did have a lower GDP. We came in at 6.9 instead of 7.1 for the first quarter. Usually that's a pretty general high quarter. People are pushing in Christmas numbers in. It's like the last quarter of the year and the first quarter of the year are big GDP numbers. And then we start to soften. We're going to soften going into taxes. We're going to soften going into summer. The sell in May and go away, come back in September, October. You know, that's for people that can't make money in the stock market. It's kind of like Warren Buffett said, right? Hey, you diversify when you don't know what you're doing in the stock market, when you can't calculate your numbers, when you can't justify possible returns that your stocks can get. If you're okay of owning the 30 top ones as well as owning the 30 worst ones. I wish I could help people understand that the stock market is not an ATM machine. With that said, I truly love what we've been able to do by making us in that downward movement, because Apple's still undervalued, Baidu way undervalued, Disney way undervalued, Ford way undervalued, Under Armour way undervalued, Visa way undervalued, Facebook way undervalued. Man, we just had a little hiccup or a little up day on Baidu. Of course, it was a 41% or 42% up day. We have one or two more of those. We'll be beating the market. We'll be up 20, 25%. We have 4 or 5 beat them. We could look at another 60 or 80% year in 1 year in the stock market. And we just need some reopening to happen, as well as some better, I don't know, how would you say it? Some better worldwide growth, which is right now hindered by Russia. The fact the U.S. is doing so good, and I'm going to say this as politely as I can, Ukraine and the Russia GDPs aren't really important on a world basis. Because we have a worldwide economy, we do have the opportunity to see some things really take off. 2 comments just came in. I'm going to mention both of them. The question is, how long is reasonable to stay undervalued? Or the other one is, can we stay in the market long enough for the market to figure out what it should do, right? Can we stay solvent long enough for things to come back? And boy, if I had a way to say, hey, if we just stay in this till June, we're good to go, I would do it. And the beauty is, hey, what can we make up on the way down so that if you're down 30% or like ARK Innovations down 70%, have you picked up shares on the way down? Have you made up money on the way down? All of you should have noticed last week we're adding shares for Under Armour, possibly for Disney for some people, for Bank of America. About 3 weeks ago, we added shares for Baidu, or we dollar cost averaged. Please take a look in your portfolios as we're trying to be smart and nibble, not putting all of our eggs into one basket. But as we've made money on the way down this first quarter, we all have more shares, and the beauty of it is, if you pick up 30% more shares of stock, you have 30% more shares of stock as things come back. It's something that diversification, or poor Kathy Woods with her ARK Innovations Fund, apparently still hasn't realized the numbers in the stock market. But any questions in regards to where we can get to, where our stocks can be, please, when I get this posted, go ahead and click on the commentary and review our commentary that we had back in January on the 10th. With that said, we have earnings season coming up. Apple's coming up on the 28th after the market closes. That's confirmed. Boeing is on the 27th. It's estimated. Bank of America is what? Week and a half away. Baidu's in May. Disney's in May. Ford's the end of April after the market closes. Facebook is also on the 27th, estimated. JP Morgan's on the 13th, so that's just a week away. Coke's on the 28th. Lockheed Martin's on the 19th. Micron's on in June. Square's on my birthday after the market closes on May 5th. I will not be working that day. Direct all your phone calls to Kyiv. We've got Target on the 18th of May, Under Armour on the 3rd of May. U.S. Bank Corp is on the 14th for the market opens, Visa on the 26th, estimated, and Verizon on the 22nd. So good, actually 2 more good questions. Would you consider current market situation as an appropriate time to do bull leap spreads? So if you're going to talk about a leap and you're going to go out more than a year, yes. If you're going to look forward into a year, I would definitely look at doing that. But there's some caveats to it, right? Number one, you won't see your position move significantly until it gets 3 or 4 strike prices above that short position in your bull spread, right? Well, it's a bull call. Hopefully you do a bull call over a bull put. But yes, if you're going to look farther out in time, I think we'll be higher than we are today. The question is, how much will inflation affect U.S. companies? So I would not hesitate, and as I look at where we're at, I would not hesitate to be in something that's international. Apple international presence, Boeing international presence, Bank of America international presence, Baidu, the Chinese Google, an international company, Disney, an international presence. Ford's a unique one. Ford is actually shutting down some of their international presence. They're making it more US centric. Ford, I might have some worries on. Facebook, international presence. JP Morgan, international presence. Coke, international presence. Lockheed Martin, one I might be a little worried about. It's US based, US centric, but it also is helped out by a budget that's inflated for defense right now. Micron, international presence. Square would be another one I'd be worried about. It really is a small business credit card machine. That one could be a challenge. Target, I actually don't know. I mean, I would say it's US based, but a good way to fight inflation is to be able to sell your product at a higher price overseas. Under Armour, definitely international presence, but their international presence is because they buy their goods and construct their products over in Asia. US Bancorp, I don't know. Visa, international presence, and Verizon, kind of US based or US centric. A good way to fight inflation is to be able to sell your goods or purchase your goods in a less inflationary environment. So international companies are going to be able to most likely do better than we're doing here in the United States. Great question. And so some of you guys that know, Abraham's out in Brazil, and he's going to let us on a little secret. Large inflation is a worldwide present, not just the U.S. And yes, it is. It is right now. So here's a question for everyone. And this will go back to William's question that he asked. Is the inflation transitory or is it permanent? And that's an interesting question, right? You could say it's transitory because it primarily, where's our inflation come from right now? Why could you push the belief that it's transitory? Bill just asked, define transitory. Well, I'm going to define it the same way the Federal Open Market Committee defined it, same way Powell defined it. It's transitory. It's a year or less. Boy, did they blow that one, didn't it? They totally blew that one. But is the inflation transitory or not? It's oil. There you go. Perfect. Bosserman hit it on the head. The main inflationary, product right now is oil. And I'm going to go so far as to say, and I'm going to apologize, that oil was a self-made problem. I can't believe we have a president that the first sanction they did was sanction Russia on oil because it'll truly hit their economy. And the same dummy shut down our Keystone pipeline. It's kind of like, man, you just can't have it both ways. Two comments were made. Well, it's food as well. There are other areas. Agreed. But it really does all start in two areas, material goods and oil. And really the oil because it's transportation. Transportation is something that that's pretty unique. The comments made, about fertilizer, and before it was about nickel for batteries. There's always some push. I even heard corn or wheat. Oh, it's going to cause corn, it's wheat, it's nickel, it's fertilizer. As you dig a little deeper, we have so much cow poop here in the United States and horse manure that we're actually exporting it overseas. Monsanto and Mosaic are looking at ways to use that fertilizer and keep it here. Hey, for the wheat, we do as much as Ukraine and Russia combined. We're actually net exporter of 100 metric tons. I think when push comes to shove, and when push comes to shove, I would hope that the U.S. will start and take care of its own. But part of capitalism is the fact that they're going to go where the highest price is. Bill, I'm just going to say yes, but the short answer is don't take everything you see or hear online and on the TV. Take it with a grain of salt. Take it with a grain of salt, because it's going to be there to. You got to just do your own research to find out if it's really true or not. All right, here we go. Doing a little check. Our markets are still bullish. Dang it, we almost got over the 200 last week, but we failed to stay above the 200. A couple people have asked me, why do I say 2 to 4 days to verify a trend? Because one day a trend does not make. 2 days a trend does not make. In fact, on the third day, we fell below the 200 day. So let's face it, we technically have a death cross where the 50-day passes below the 200-day. It'll be interesting to see where we end up. But we are still technically bullish on the S&P, on the Dow Jones Industrial Average, but we are unable to get above and stay above the 200-day simple moving average. That will be a key for the next leg higher. Earnings could be the catalyst that would drive us higher. On the S&P 500, we're bullish again. We're bullish. We're moving higher. We're above the 50-day and the 200-day. We came and tested it last Friday. Really pretty amazing. You take a look, that's a doji, that little cross. It does not mean the stock market believes in Jesus and is now using crosses. It is a doji, which is a reversal of the technical trend. It bounced off the 200-day for the second time, and it's off higher. So we'll see how high we go. Unfortunately, looking at bigger money down here on your Willens %R, big money has put quite a bit of money in for this coming quarter. All right, and my favorite, the one that was down in bear market territory, the Nasdaq. We are also still bullish. We hit off the 200-day. It acted as resistance. We're coming up for our second test. My worry as well for the Nasdaq, if we take a look down here at the bottom, a lot of big money put that money to work in the last 2 weeks. Well, Kevin, they put it to work in a down week. Yeah, I know. You guys are going, yeah, it doesn't make sense. Guess what? The market always doesn't make sense, but that's just a lot of money and a lot of putting stuff to work here on an institutional side that I normally don't like to see. I'd feel much better if we could hit one of these areas down here where it's oversold. With that said, we stayed up for 8 weeks last October, November, where our market was still moving higher. So don't forget your technical indicators. It's a social science. It's not an exact science. It doesn't always work. In fact, it's kind of a coin flip. But as we're looking and bringing more indicators together, really earnings will be the earnings will have to be the catalyst to push us higher and push us above that 200-day where there's a ton of orders stacked up to buy back in. Of course, you got to get through a ton of orders that are stacked up to sell. If you ask me for April, I'd still say we're up 2%. Earnings is pretty weak. We've got Levi on Wednesday. We got Conagra on Thursday. Stellar, I can't remember what it is. It's Stellar Constellations and WD-40. Economic reports, factory orders today came in negative 0.5 on estimated 0.6. Typically, factory orders are a little slow this time of year, and we'll pick up in April and May for the June summer sales. Trade balance is expected to be negative. what, $88 billion. Interesting to see that. I would hope that we see the ISM Services Index continue to be above 50 to show expansion. Wednesday, we have the Federal Open Market Committee minutes on what they were discussing. Wednesday, expect to see a pretty flat day, and we could have a pretty down day if in the minutes they talk about adding a couple 50 basis point rate hikes in the near future. Consumer credit on Thursday we'll pay attention to because of what we trade in. Wholesale inventories on Friday. Currently let a lot of things run without protection. That's how we're beating the market. I do have some interesting commentary here. For those of you that wonder, Kevin, are you crazy? The metaverse could be a 13 trillion market by 2030. At least someone at Barron's believes me. Not to forget that we had some of our tech stocks have their worst quarter ever. And again, technology that's cash heavy, that's cash positive, that doesn't need to borrow money at higher interest rates will definitely be the ones that come back quicker or come back the highest. I put interesting auto Ford sales quarter. The only thing that held them back were chips, which means they've got a lot of pent up, well, I'm going to say pent up inventory or pent up demand. I know I would like a new truck. It's not every day that you see a Ford run 300,000 miles, same engine, same transmission. I'm just waiting for it to strand me on the side of the road. And really, unfortunately, I don't want to pay what the new prices would be right now for the truck I want. So for crying out loud, get us some chips, have those prices come down 7 to 17% again, and I'll be a buyer of a new Ford truck. Very interesting article here, and I'm going to try to blow this up so you can see it. Where did our jobs come from? And it's leisure and hospitality, excuse me. That was by far the big winner. A close second was professional business services, but the services sector in general are the ones that were bringing over 200,000 jobs to us last month, excuse me. Retail trading was only 49, manufacturing was only 38,000, health and social assistance was only 33,000, construction was only 19,000 new jobs. Information technology is only 16,000. Financial services, financial activities, only 16,000. Wholesale trade was 7, government was 5, mining and logging was 3, transportation and warehousing that's mostly affected by utilities, or the oil was down 500 and utilities was down 1.2 thousand jobs. Just pay attention. This could be a precursor to an opening again. That's the way I saw it or read it, especially when I saw that people were wanting to get out of Dodge, right? They want to go spend money. They want to be that, they want to get out after being stuck up or, I want to say retained, but restrained at home would be a better word. A couple comments that came in. Interesting that government keeps growing. Government always grows. I wish. I'm really surprised that utilities, natural gas, electricity, and so forth, that's where I think, oil falls into. Highest numbers and they're losing jobs. Doesn't bode well. Again, another indicator that maybe talks that energy is not the place that you might want to put your money in the near future. I would like to see Dominion take off. They're one of my favorites, and I'm paying special attention to them. But do read through about where the jobs came from. I found it interesting, so it's something that you might find interesting as well. I have an article here on Asia is seeing a wave of buybacks. Goldman Stanley says these companies could be next. Not to excite you too much, Baidu was not mentioned in any of these, but JD was, which Baidu owns 30%. Alibaba was, Tencent, NetEase. I mean, a lot of what Baidu has their tentacles in supposedly has a huge buyback opportunity. I was not able to verify a lot of what's in this article, but I still did find it very interesting. I'm not sure I'd even invest in some of what the names are here, but I do like the premise behind it. And last but not least, for those of you that are going to turn 50 like me this year, we're probably not going to see Social Security as they're now moving it higher. You're not going to get your benefits until age 67. Wouldn't surprise me if that's going to be 80 or 90 by the time I turn 65. A lot will change in the next 15 years. All I'm going to say is if you work out your numbers, it takes like, boy, 17 years to break even if you wait till the latter part to take your Social Security. The moment you can qualify for Social Security, that used to be that 65 number. I wouldn't take it early at 62, but the 65 or 67, the moment you qualify for it, take it. If you really don't need it, you can wait on it. But understand if you wait that extra 5 years, it's like pushing your break-even point 15 years down the road. It just isn't worth it. And with that, any questions you guys have that I can answer for you today? Any questions on something that maybe I missed or something that you would like to ask me on the way I'm currently running portfolios? There's very little protection. We're just running to the upside. That does scare me with Baidu, but it can just be the next day. If I need to, I will put all the protection back on. Kevin, why are you still trading Baidu? I'm investing in Baidu still because I want something that's going to represent the second largest economy. It's something that's proven. I've probably made more money in Baidu than any U.S. stock in all my years of trading, investing, and money management. So, plain and simple, that would be the reason why I'm in Baidu. Kevin, when would you add protection back on? What is your trigger? I've got a couple triggers. In fact, I think we came up with 6 between Keeve and I. Any of the Chinese stocks or tech stocks, if it's going to be any comment about China not allowing some investigation or some, what's the word I'm looking for? An audit on the Chinese companies. That affects all technology worldwide because a lot of our parts come from there. A lot of our construction of the computers come from there. That would be a trigger. A trigger would be another higher inflation numbers that are coming up. That would be a trigger. Lower earnings in general would be a trigger. Russia putting more troops back into Ukraine or resupplying to go back in. That would be a trigger. There's a bunch of things that we need to be looking at. Oil pricing would be a trigger. If we don't get the oil pricing down, there's a trigger to be looking at. And I always follow the money. It really scared me to hear Putin talk about wanting to take off or ruin our reserve currency. If you want to see the U.S. go to Great Depression, we lose our reserve currency status, everything will increase in price anywhere from 16.8 to 23%. Maybe some things will only go up 9%. The advantage we have with our reserve currency status has been our economic advantage for, since the late 70s. And welcome to administrations, both Democratic and Republican, that have done a really piss poor job of socking money away for a rainy day. But with all due respect, I've had some favorites as presidents, but we've had this economic advantage, and instead of capitalizing on it, we have squandered it and overspent. So that is kind of scary. And a backup question, how does one destroy the reserve currency status? Well, most likely, since there's not another country with a stable currency that's out there, and believe it or not, even though we have a ridiculous absolutely ridiculous debt that we owe, and the stupidity of people in Washington not worrying about paying down the debt, but just servicing the interest on it. If we went to a basket of currencies where, hey, we're going to take the euro, we're going to take the China yen, we'll take the yuan, we'll take a ruble, we'll take an Indian, I don't know what Indian is, a shekel. I'm just making that up. The dollar, the Brazilian real. If we took a basket of currency, so the U.S. would not have that economic advantage, the reserve currency and all the dollars that are held would flood the market, and it would just skyrocket inflation for the U.S. dollar. That's how, when you hear groups of countries starting to trade oil in their own currency or a basket of currencies, that's our first red flag that our reserve currency status could be in jeopardy. And thank you, Mod. Mod said the Indian is the rupee, and you are correct. If you see if some of these big major countries in the world go to a basket of currencies to take our economic advantage, the U.S. is looking at a China or a Great Britain type economy where that was 30 years of being stagflation or stagnant. It'll be kind of ugly. All right, what else do you guys ask? Substitutes per dollar, there's a confidence factor that only dollar passes, at least for the foreseeable future. You are correct. I mean, the dollar right now is considered the most stable currency because we're not in debt as much as everyone else, which is scary because that's crap. I mean, all I'm going to say is this. Food storage. You've heard me say it in the past. Don't hesitate to have a 30-day food storage, if not 3 months or more. And no, don't throw all your money into grams of gold or silver. There's not enough currency that someone's going to want to trade you a bunch of silver or gold when it comes to feeding their families. I mean, just start to keep a little bit of food storage. It can't hurt you. All right, guys, are there any other questions? If they're not, I appreciate you guys being with me tonight. I hope this is helpful. Right now, our portfolios are leaning strongly bullish. But with that said, and again, on a moment's notice, I can add protection on as needed. At this time, I think we only have one stock or two stocks that have actual long put protection on it. And I'll be looking to take that off relatively quickly, pending earnings. Or I might do individual out of the money short-term protection for our companies during earnings, but I'll get to that next week. All right, guys. Hey, appreciate being with us. Thank you very much. Tar Heels by 10. I would go for the Tar Heels only because they beat Duke. I really want to see Coach K go out on top, but go Tar Heels, go Michael Jordan's old team, right? All right, thanks, guys. Have a good evening. I look forward to talking to you next Monday. Bye-bye.
So one thing I've been learning